Good afternoon. Welcome back to PWT Live News with your host, Mosey Along. And today we're talking on Scam Damnation, and it's called the Crypto Turnip Problem. We're looking at a market that promises the moon, delivers the clouds, and leaves most people standing in the rain. Crypto, the trillion-dollar illusion, where a handful of turnips walk away with fortunes while ordinary investors lose their savings. This isn't about fear, partners. This isn't about hype, cowboys and cowgirls. This is about patterns. And the pattern is simple. Turnips harvest the grains and the gains. Everyone else harvests the loses. And you're asking yourself, what is a turnip? Similar to a Yahoo from Gulliver's Travel? Ring a bell? In Scam Damnation terms, a turnip is someone who profits massively from crypto without producing value. They don't innovate. They don't build. They don't stabilize the market. They extract. Turnips thrive on hype, timing, insider networks, early access, and the ability to exit before the crash. Crypto doesn't create turnips. Crypto enables them. Crypto scams don't always look like scams. They look like opportunity until they don't. Here are 5 patterns every viewer needs to understand. Pump and dump cycles. Insiders inflate a coin's price, then cash out, leaving everyone else holding the bag. Rug pulls. Developers vanish with investor funds, shutting down the project overnight. Wash trading. Fake buying and selling creates fake confidence. Influencer manipulation. Hype replaces fundamentals, and followers pay the price. Unregulated exchanges. No oversight, no protection, and no accountability. These aren't rare events. They're built into the system. Crypto headlines love big numbers. Trillions gain, record market cap, explosive growth. But here's the truth. Market cap is not real money. It's theoretical value. Numbers on paper that vanish the moment people try to cash out. Liquidity is thin. Prices are fragile. Wealth is concentrated in early adopters and insiders. When crypto makes trillions, it's usually the turnips making trillions, not the investors who join late. Most people lose money in crypto for reasons that have nothing to do with intelligence and everything to do with timing. They lose because they buy late. They trust hype. They assume crypto behaves like stocks. They don't see insider networks. They don't know that the market is unregulated. They don't understand how fast settlement collapses. Crypto is not a scam, folks, but the way people use it often is. Let's walk through a typical scene. A new coin launches. Early insiders buy in at pennies. Influence promoted. Volume spikes. The price skyrockets. Late investors rush in. Insiders quietly exit. The price collapses. The project disappears. Turnips walk away with millions. Everyone else walks away with nothing. Zero, zip, nada. This is not a rare story. This is the standard story. Scam Damnation isn't here to tell you crypto is evil. It's here to tell you the truth. Crypto is a market where a few people win big and most people lose quietly. Not because they're foolish, mind you, not because they're reckless, but because the system rewards abstraction, not participation. If you're going to step into crypto, step in with awareness, not hype. This has been Scam Damnation with your host, Mosey Along, on PWT Rely news segment, where we shine a light on the shadows, expose the patterns, and remind you that clarity is the best protection. Stay aware, stay steady, and stay informed. Have a good rest of the week, partners.